As we enter week 32 of 2026, the US equity market has delivered a dramatic, rate-driven surge that caught institutional bears completely flat-footed. Following a turbulent month of July, Wall Street kicked off August by pushing major benchmark indices back into record territory. On Friday, the S&P 500 jumped 0.6% to close at an all-time high of 7,757.64. While the Nasdaq Composite surged 1.3% to 26,690.62, and the Dow Jones Industrial Average rose 0.3% to 54,036.93. The catalyst behind this sudden Friday rally was a shocking labor market update from the Bureau of Labor Statistics, which reported that U.S. employers unexpectedly cut 23,000 jobs in July alongside downward revisions to May and June figures. While job losses typically trigger growth anxieties, fixed income markets immediately priced in a dovish shift in monetary policy, reasoning that labor weakness effectively halts any further interest rate hikes by the Federal Reserve. Consequently, the 10-year Treasury yield dropped sharply to 4.64%, while the policy-sensitive 2-year Treasury yield fell to 4.20%. Adding further relief to the inflation outlook, West Texas Intermediate, WTI, crude oil tumbled over 6% to drop back below $80 per barrel as diplomatic negotiations eased immediate fears of supply bottlenecks in the Strait of Hormuz. Lower energy costs paired with falling borrowing yields created a powerful tailwind for mega-cap technology and broad market valuations alike. Money flows confirm that while short-term volatility remains active in high-beta semiconductors, institutional capital is aggressively rotating back into quality growth and equal-weighted market exposure. Sector leadership and ETF strategic calls. Our primary vehicle allocation for week 32 targets the Invesco QQQ Trust, QQQ, which tracks the Nasdaq 100. Following the recent 5% technical pullback in big tech hardware, QQQ has reclaimed structural momentum, closing the week at $702.40. The macro thesis for accumulating QQQ rests on the rapid repricing of interest rate expectations. When Treasury yields soften, the present value of long-duration cash flows generated by mega-cap technology platforms expands significantly, with key enterprise software providers proving their ability to monetize generative AI infrastructure. QQQ offers a high-probability trade structure. We are targeting long positions on localized backtests between the $695 and $702 zone. Our second strategic ETF call is the Invesco S&P 500 Equal Weight ETF, RSP. While market cap-weighted indices are heavily influenced by the top 7 tech giants, RSP assigns equal weight to all 500 constituents. Last week, RSP continued to exhibit stellar market breadth as 8 out of 11 S&P sectors logged positive gains. Accumulating RSP at current levels insulates your portfolio against single stock concentration risk while capturing broad upside across industrials, financials, and consumer cyclicals. High conviction corporate equities. Our top individual corporate conviction call for week 32 is Amazon.com, Inc. Ticker AMZN, which recently staged a historic rally to trade above $286. Pushing its total market capitalization past the monumental $3 trillion mark for the first time in company history. The fundamental driver behind Amazon's multi-billion-dollar market expansion is the accelerating growth of AWS cloud infrastructure alongside resilient e-commerce operating margins. As institutional investors look for companies with proven AI cash flow generation, Amazon stands out as a clear sector leader. We view any brief consolidation back toward the $280 to $284 breakout level as an optimal institutional entry zone. Our second equity conviction call is Nvidia Corporation, ticker NVDA, which closed Friday up 2.3% at $131.20 as buyers stepped in to support semiconductor hardware leaders. Nvidia's recent 20% pullback from its peak provided a healthy valuation reset ahead of its upcoming Q2 financial results scheduled for late August. With hyperscale tech leaders confirming massive ongoing AI capital expenditures, Nvidia remains the primary beneficiary of global data center hardware demand. We are looking to build long exposure between $127 and $131 ahead of the earnings release. Risk mitigation and technical triggers. Executing tactical trade setups requires strict adherence to risk parameters and automated stop-loss management. For the Invesco QQQ Trust, our designated entry zone is $695 to $702. A daily closing print below key horizontal support at $682 will invalidate our short-term bullish thesis, while our upside target is set at $725. For Nvidia, NVDA, strategic entry points lie in the $127 to $131 range. Due to high implied volatility ahead of earnings, we place a hard stop loss at $121, while setting a pre-earnings upside target at $144. The primary systemic risks to this strategy involve potential growth contraction and lingering geopolitical headlines. Although falling yields boost equity multiples, a prolonged downturn in payroll data could signal broader economic slowdown concerns that drag on consumer discretionary spending. Additionally, sudden reversals in crude oil prices would reignite sticky inflation concerns, forcing central bankers to maintain elevated rates for longer. The week ahead watchlist. The upcoming 5-day economic and corporate calendar will provide crucial validation for this week's market trajectory. On the macroeconomic schedule, investor focus will pivot to the July Consumer Price Index (CPI) and Producer Price Index (PPI) releases midweek, which will confirm whether disinflation trends remain intact following the weak payrolls data. Retail sales data later in the week will also provide a real-time check on consumer health. On the corporate earnings front, the quarterly reporting cycle remains active with key disclosures across consumer, retail, and technology sectors. Institutional traders will scrutinize forward guidance for signs of margin pressure or shifting demand trends. Ensure your portfolio allocations are properly hedged, keep your stop-loss parameters strictly active, and tune in daily to Global Macro Pulse for live market breakdowns. Thank you for watching, and we will see you in our next strategy session.